Let's bring in Mike Santoli and Peter Schiff of Euro Pacific Capital, also the author of The Real Crash, to hash it out. Let's go with the away team first. Peter, we saw some of your notes in reaction. You are disappointed. What specifically could Bernanke have done today, realistically, that would have pleased you?
Well, he could have resigned. But I don't know that that would have necessarily pleased me because I'd be afraid of his replacement. But maybe he could have told the truth, which is something he's probably never done in one of these press conferences. But, you know, he's basing his forecast of an improving economy on a housing market that was only rising because the Fed was able to blow some more air back into the bubble. But he can't talk about tapering because he knows he can't do it. Look, mortgage rates, if the Federal Reserve does not start buying more than $85 billion a month of mortgages, we can have a 30-year mortgage rate back above 5% by the end of this year. I mean, now it's right above 4%. And by the end of the year, this whole housing mini boom could be a brand new bust.
One area where we are definitely seeing a reaction is in the mortgage applications. And just in the short term here, when we've seen that 10-year yield run up, we've seen a pure handbraking of any mortgage activity. So that's going to be in effect. And Mike, I would ask you, this is different because this is a tangible, instant reaction whereby we were wrong earlier in the year about the effect of sequestration cuts, and we were wrong, hugely wrong, about the effect of across-the-board tax increases. This one is real, and it's hurting.
It is hurting in the short term. I obviously think you have to find the real level for mortgage rates and the clearing price for these houses. I don't think actually rising house prices has to be the exact thing that you're targeting here, or at least that you're hoping for. It has to be higher turnover, take up some of the slack in the market. We'll see if it actually happens. I would go to one other strand of the Fed's projections on the economy, which also are slightly a damper. If you're lowering your unemployment rate forecast, in other words, it's a better looking prospect for unemployment, but you didn't raise your GDP forecast, implicitly you're kind of saying, well, the unemployment rate's going to come down without really an acceleration in growth, maybe not for the right reasons. Again, this is a negative cast you can put on it, but I do think it's basically saying we may not have a booming economy when it's time for us to withdraw. That's fine. We didn't think it was going to be a boom, but the market has to adjust to that
Danny
idea.
Downer there in the newsroom.
But no, the market just has to adjust to this, and it can probably deal with it if, in fact, it sees the economic data come in okay.
Peter, and you've talked about pricing data and how the CPI is a bunch of garbage. Is there any number we can look at that's going to give us a real indicator on this economy? Because, frankly, I'm just kind of seeing this moribund kind of economic growth plane that's asymptoting at zero. I don't see a lot of price inflation or deflation. I see nothing happening. I see Japan at worst.
Yeah. Well, I think you can look at things like the size of our debt, the enormity of the national debt, the unfunded liabilities, the growing trade
Peter,
deficit,
I don't pay that out of my pocket.
Savings rate.
Peter, I don't go to the gas station and say my sinking savings rate as a national economy is a real problem for me. I mean, I'm talking about what we live,
yes,
our life.
That is an objective way to look at the overall success of the economy. Are we richer or are we poorer? Are we growing our liabilities or are we growing our assets? America is getting poorer. We're consuming our way into poverty. We're borrowing from the rest of the world. We're trying to reflate a phony economy based on asset prices like real estate and stocks. Meanwhile, the real economy continues to deteriorate beneath our feet. You can see that if you look at the real numbers. But the Fed is trying to create an illusion by creating inflation.
I want to look at the real numbers. I'm dying to look at the real numbers because I don't believe anything that I'm seeing out there. Tell me, please, and put this in the household, Peter. Let's talk, what am I bringing home here? What numbers should I be looking at to tell me about inflation, deflation, whatever's happening? Well, is it my grocery store receipt? Because that's not going higher. What I pay at the pump?
Individual households are struggling to make ends meet. Their cost of living is going up. They've had to deplete their savings just to pay the bills. Utility costs are going up. Food costs are going up, medical costs are going up, all the basic necessities of life are getting so expensive that more people can't even afford some of the pleasantries of life.
Peter,
our
I guess my
standard
question
of living
where's
is
that
collectively declining.
I hear what you're saying, and I understand
data is
everything.
there.
What number? Where? The CPI is showing really subdued inflation. Unemployment's a bunch of garbage. I just want a real number.
Look at the labor force. Look at all the people that are on disability. Look at all the people collecting food stamps. Would this be happening? Would we have almost 50 million people on food stamps if the economy was actually growing like the Federal Reserve thinks it is? Would we have record numbers of Americans on disability? This is a sign of a collapsing economy. The Fed could pretend it's growing all at once because we're measuring the economy with shrinking dollars, but the fact of the matter is what the Fed is doing is not working, and it will never work. And in fact, Ben Bernanke even said if our forecast turns out to be wrong, which it will, because the Fed's forecasts are always wrong, they're not going to admit they made a mistake.
Peter,
they're just going to do the same thing over.
What are dollars shrinking against right now? What is the value
they're
of a dollar
shrinking against all the things that we need to buy. But by the way, the dollar actually hit a 4-month low against the euro yesterday. It's rising a bit today.
The one currency you can point to. Okay.
Central. No, I can point to the Swiss franc, or I can point to the Norwegian kroner. There are a lot of other currencies, but other central banks are making the same mistakes. They're all printing in unison, and so prices are going up. Look, there are countries now. Look, they're protesting in the streets in Brazil right now. They're not protesting falling prices. They're protesting rising prices.
Okay, Peter, I got to cut you off there.
It's only the Federal Reserve that doesn't like falling prices.
I hear you completely, Peter. Thank you so much. And I trust that you'll be angrily discussing this for months to come, and I don't necessarily disagree. Thanks to Peter Schiff.